Next up, we've got the man behind Bitcoin is Venice. He's a writer in the space. He has been an investor in the space also. He is also writing and putting out a lot of interesting content. I'm excited to see what he's got. So everyone, please welcome Alan Farrington.
All right, thank you very much. Just by the way, due to a technical mishap, I'm going to have to stay at the podium, but I would kind of like you all to see my t-shirt because it's been under wraps for I ordered this about 3 months ago and debuted it today. Unfortunately, you probably can't see it again. But anyway, yes, so today I am going to be talking about Bitcoin and Islamic finance. So I think that this has become a bit of a meme. And it's partly, if not largely, my fault for championing this idea, but I've realized over the past maybe 1 or 2 years that even though this is often referenced, I think it's very rarely really discussed. And at the same time, there's a lot of misconceptions around what Islamic finance really is in the first place. I think the most common of which is probably that it's just regular Western finance, except you aren't allowed debt. And if there's a single bad idea that I want to try to kill today on the record, I think it's this one. This sort of simple enough, kind of innocent seeming enough idea it is wrong in just about every way. So I think not only does such a simple comparison do a great disservice to what is really quite a rich school of thought, but even the sort of superficial assessment of debt itself is kind of inaccurate, as we'll see. But who am I to be getting up here and talking about this in the first place? Well, until fairly recently, I worked in TradFi. I'm actually now setting up a Bitcoin business that I'm hoping to launch and sort of publicize soon, but to which all of this is highly, highly relevant. So I know we're not really supposed to do promotions in these talks, and I don't really have anything to promote yet anyway, but if this is also of commercial interest to you, please do come and talk to me about it. And if anyone, if you're watching this online, if you're not in Riga just now or later, I should say too, that's my Twitter handle. My DMs are open. I would love to hear from you. I'm also not Muslim. I think this is definitely worth mentioning up front. I mean, firstly, just for the sake of kind of honesty and transparency. I mean, I'm sure some of you are wondering, given how niche a topic this is. But nothing I say has any kind of theological weight behind it, right? I'm not preaching. I'm not trying to convey any kind of authority just beyond my own intellectual interest. And if anything, that is what I want to try to instill in all of you today. I think that you too should be intellectually interested in this because it provides a centuries-old, already worked out alternative to what we might call fiat finance, and which I think aligns remarkably well with Bitcoin. So I'm going to cover 3 tenets of Islamic finance, which I've helpfully reduced to slogans for you, and which I think will probably work pretty well as memes as well. And I'm focusing, as you can see, on the contrast to fiat finance. And I just want to be clear that this is not remotely exhaustive. It's not supposed to be. It's more of like a layman's introduction, the point of which is to convince you that this is highly dissimilar to the fiat that we know and hate, and similar to the Bitcoin that we know and love. So I'm going to talk about risk sharing, not risk transfer, use, not financialization, and the spirit of the law, not the letter of the law. So Islamic finance is remarkably astute on the risks associated with entrepreneurship. You could even say that it mandates humility in the face of economic uncertainty, because the idea that you can know what is going to happen is not just impossible in a kind of Hayekian sense or foolish just in terms of common sense. It's blasphemous. So only God knows all. And so for you to act as if you know what is going to happen is seen as unethical. So given you can't know what is going to happen, you have to make an informed decision and you have to take responsibility for it. So even if you don't claim to know what is going to happen, if you nonetheless stand to benefit no matter what happens, you are seen as having unacceptably disregarded a personal responsibility to take the risks that are necessary to earn those rewards. So you don't have to take any responsibility, but if you want an uncertain reward, that can only follow from skin in the game. Oh, sorry, that should have been there before. So what does this mean in practice? Well, this background is necessary to appreciate where the prohibition on income from fixed interest debt comes from. And it's a lot more sophisticated, let's say, than just saying no debt. So if you lend to a business and you intend for your payback to come from interest payments before dispersal to shareholders and before reinvestment, you will get paid no matter what. It doesn't matter whether the business does well or poorly. It doesn't matter who is taking what risks, what responsibilities, making what decisions. You will be paid back. And so this is perceived as risk transfer. That's not supposed to happen. It doesn't really say that much anyway. Hopefully it will come back on soon. So yeah, this is perceived as risk transfer. So between those who are contributing capital to the business, there we go. The risk is being transferred from one group to another rather than being shared. Now, you might think that this is just incredibly naive. You know, why not have credit markets with, again, it doesn't say that much. Why not have credit markets with consenting and informed participants? And I have a lot of sympathy for this. For what it's worth, I do think that there will be credit markets on a Bitcoin standard. I think that actually could be an entirely separate talk. But what I would also put to you is that I think rejecting this out of hand is equally, does that say the right thing? Yeah, is equally naive because it ignores how blatantly unethical a great deal of debt-based finance is. If you have to have a real stake in the uncertain enterprise that you're investing in, there would be no zombie companies, there would be no private equity, there would probably be considerably less global, impersonal capital, and a great deal more local, interested, involved capitalists who are sharing the risks of their joint endeavors. So interest is useful in quotation marks, primarily because it lets you price risk efficiently. But what the lens of Islamic finance allows you to see is that this also has downsides. Do you really want to be able to price something that you know nothing about and in which you have no real stake? Do you want the incentive of finance to be first and foremost exploitative? And just for the purpose of avoiding future legal liability, I have no idea who this individual is. I just Googled old mean banker, and this is the first thing that came up. So maybe, look, maybe you do, maybe you don't. Again, I'm not trying to be a prude, I'm not preaching, but my very strong suggestion would be that Bitcoin is going to make this decision for you. Because zombie companies and private equity are only possible in the first place because of the mechanism of money creation that prevails under fractional reserve and central banking. So another way of putting this is that financial exploitation is going to become a lot more difficult, which means that risk transfer is going to become a lot more difficult too. If you had a sound money that appreciated at the aggregate rate of reinvested return on capital, why would you risk it for a fixed upside? If you no longer needed to chase yield to preserve your purchasing power, and if you no longer needed to misallocate capital, why not take some responsibility for allocating it well instead? Why not share the risks and share the rewards? Now, you might think that zombie companies and private equity are kind of weird niches within finance for me to decide to be mad about. But I think really they're only the most salacious in terms of irresponsibility and exploitation. And in fact, when you dig into it, almost everything that follows from debt-based finance, I believe, has similar characteristics. So another rule of Islamic finance is an interesting one around how collateral works, which aligns with avoiding exploitation and taking responsibility. And it's really hard to visually communicate the concept of collateral, by the way. I don't know if anyone even got that. So in Islamic finance, if you have an investment that is collateralized, you cannot retain possession of the collateral until you have fulfilled your liability. So I could borrow from you, and I could give you like a gold bracelet, say, as collateral, but I would have to actually give it to you, right? I can't keep it. And if I don't pay you back, then you keep it. And prior to that, or per whatever the terms of the contract are, you can't sell it either, because that is rehypothecation, which is effectively fraud because you are avoiding a personal responsibility. So you originally said that you would do something that you knew you could do, but then subsequently behaved in such a way that means you don't actually know if you can do that anymore or not. Now, this might all seem pretty trivial, but I gave an example where both the personal incentives and the financial terms are super easy to understand. In fact, this has far wider implications than what's basically just a pawn shop. It means that you can't have mortgages, for example, because a mortgage is collateralized by the house that the borrower possesses while they are paying off the loan. And there's a John Mulaney joke, which I will obviously now butcher, where he says, "I bought a house." Well, no, the bank bought a house, but they're letting me live in it, which is super nice of them. And forgive me for feeling the need to explain the joke, right? But this is funny because he's drawing attention not only to how widespread and how normalized this activity is, but also this way of talking about the activity that obscures what is really going on. So criticizing something that's so widespread and so normalized might seem bizarre, but again, what Islamic finance does is give us a lens to see the downsides, and there are many. Mortgages are predicated on future income streams that you can't possibly know anything about. It's a promise that you have no idea that you can keep, but that also constrains your ability to act because all the risk has been transferred to you. If you can't handle the risk, you lose everything. You get kicked out of your house, you have nowhere to live, potentially while still in debt for it as well. And then finally, rather than making housing affordable and accessible for all, as a typical fiat propaganda would go, this directly contributes to monetizing housing. And it's not just that housing becomes a de facto store of value, it's even more literally true than this, given the house becomes the collateral for the credit asset of your unknowable future income on which the liability of new money is brought into existence. So it's a lot more than just private equity and zombie companies. It's virtually all personal finance, fiat personal finance, I should say, and it's a decent chunk of commercial banking as well. So Bitcoin fixes this technically, but Islamic finance fixes this ethically, because your relationship to the risk and the value of productive assets has to be in their use. Or I think to be more accurate, it's just not even conceivable per any activity that is ethical for exactly that reason. And some of you have probably jumped ahead and realized this already, but where this is all going is that you can't print money. It violates just about every ethical tenet so far described. It requires a guaranteed payment that you have no way of knowing is possible and no way of taking any real responsibility for. It's economically equivalent to rehypothecating the collateral, and so it contrives wealth from baseless promises rather than from real work. The aversion to financialization in Islamic finance comes from the pretty straightforward idea that there ought to be a one-to-one relationship between a financial instrument and the underlying real economy asset. The more this ratio diverges, the less real finance becomes, and the more we end up building a house of cards that will surely one day collapse. Now, obviously, Bitcoin doesn't work this way technically, but I'm hopeful that I don't really see any reason for it to work this way socially either. Prior to being more obviously money day to day, I think that the clearest ways that we're going to see, or that it will be evidence what Bitcoin's financial characteristics are each of the following. So lightning channels, in which there is no financial instrument because it is being used, or as a kind of pristine collateral for a more involved financial transaction. But in which case, clearly, you will have to hand over the Bitcoin. If we've learned anything from the incomprehensibly stupid DeFi, CeFi implosion, it's that the promise of a Bitcoin is not a Bitcoin, right? Only a Bitcoin is a Bitcoin, and there's no nonsense of it being wrapped or of total value locked or of yield, right? So the yield is the friends we made along the way, but the Bitcoin is and only is actual Bitcoin. Not financialized, but used. So one of the reasons that it's tricky to pin down exactly what Islamic finance is that the idea of setting it side by side with fiat finance and kind of comparing and contrasting sort of doesn't make any sense in the first place. Islamic finance isn't a list of what objectively is and isn't allowed. It's a framework for deducing what should and shouldn't be allowed based on certain ethical principles. Now, as with credit markets and as with mortgages, you might reasonably think, well, what good is a well-spirited law if you can't objectively tell what the law says? But again, Islamic finance encourages us to ask back, what good is a well-lettered law if what it is telling us to do is blatantly unethical? And I want to be really clear about this, so I'm not, I guess, accused of being kind of rhetorically overzealous. It's not that there is no letter of the law. There clearly is, and I've referred to it several times already. It's more that the letter of the law is not the focus. The core point, the core tenet, what matters more than anything else is the spirit of the law, and that is how the letter of the law is derived, as opposed to vice versa. So if you want an even snappier slogan, I guess you could maybe say ethics, not efficiency. And again, I'm not preaching, but I think if you entertain the ethics in question, you'll find that they align with Bitcoin remarkably well. So these would be principles like nafs, the self or the ego, which we ought to discipline, and sabr, patience, which we ought to inculcate. This is effectively just telling you to have a low time preference, right? And I don't think it's much of a surprise either if you consider that these ethics evolved around the prevalence of gold coinage and a mercantile system that was heavily dependent on reputation. I also don't think it's much of a stretch at all to say that the Islamic economic model is finance as it would be on sound money. I think this helpfully and naturally bridges the divide between the financial and the ethical. The primary ethical consideration that sound money imposes is responsibility. There's no lender of last resort. There's no monetization. You have to take responsibility for your actions, and you have to try to provide real value in use. And perhaps more, I guess, psychologically even than ethically, sound money encourages us to think long-term, which is an argument I'm sure everybody here is more than familiar with. It relieves you from worrying only about your personal and immediate well-being and allows you to care about bigger, more transcendental things, possibly the most important of which would be the well-being of others. And so this quickly goes well beyond the financial and allows us to generate all of the ethical tenets on which Islamic finance rests and the spirit of the law on which it encourages us to judge. Take responsibility for your actions. Encourage others to do the same. Keep your word. Do what you say you will do, and don't say you will do things you don't know you can do. Therefore, be mindful of your reputation. Think and act locally, because that is the only place your reputation can matter and the only thing you can know. And don't take advantage of people. Help them. Be kind. The last thing I'll say before wrapping up is something that I wanted to try to demonstrate rather than dictate. I hope I now have. You do not need to be a Muslim to think that this is how people ought to behave, and that the world would be a better place if everybody did. But, you know, they don't, and everything's shit, and, you know, cry harder, Alan. So I guess where that leads us is the most important question of all. Will Bitcoin fix this? I don't know, because I can't see the future, right? And it would be unethical of me to pretend that I can. But I think if we take responsibility, or enough responsibility, Bitcoin can help us fix this. So, thank you very much.